So Gesner, I work with a lot of buyers that are buying their first home, and I have seen that they get pre-approved sometimes. We start looking at houses and the rates go up and they freak out. They tell me maybe I should wait until they go down again. What options do they have with you?
Well, this is something that actually happens quite often, right? So you have a lot of people out there looking for homes. They're all excited. They find the perfect home, and then boom, rate just went up a little bit, right? Now, what people need to understand is that rates itself, right? So when you look at a 6% or 6.25% interest rate, the rate doesn't actually change. It's the cost for the rate, right? That change on a daily basis and sometimes multiple times a day, right? Depending on the lender. But it pretty much is what the market is doing, right? So that's what would cause the price to change. So for a client that's shopping, right, we want to make sure that they have full confidence that if they find a house, that we can still help them get that house with a payment similar or exactly the payment that they can afford, right? So affordability is a very important thing. So when for a client that's out there shopping and we change on them, we have tools that they can use once we're on the contract. We can do a permanent buy down. That's where we can use extra funds, rather if it's a seller's concession or maybe a credit that we're giving the client to buy the rate down so they can get the payment that they desire.
For the entire loan?
For the entire loan. Or we can use a tool called a 3-2-1 buy down.
I heard about that.
You heard about that, right? So that's a temporary buy down where the first 3 years, the payment will go lower for the client. So the first year, it's going to be 3% less than the original interest rate.
Which is incredible.
It's great, right? The second year, 2% less, and the final year, 1% less. And of course, fourth year, just go back to the qualifying interest rate. Well, what we want to do is educate the client to understand that the goal is not to stay in that temporary buy down for 4 years or 3 years. What we want to do is within the first 3 years is to help them refinance into a more permanent interest rate, especially in this environment where we're expecting interest rates to go down, right? So ultimately, our goal is to make sure that our client and our realtor partners go out there, shop with confidence, knowing that by the time they are under contract, that we have a solution to make sure that they stay within the payment that they're comfortable with. Because this, at the end of the day, buying a home, it's not a short-term deal, it's a long-term deal.
Very long-term.
Right? So that's the way we would address that.